How can we use this for penny trading? Well, that's what I was telling you. Um, you can't really use it. I mean, if you can find penny stocks that um, have good behavior, then on the daily chart, you can use this technique for that, for swing trading the penny stocks, right? But most penny stocks don't have good behavior. They have really crazy bad behavior. But on a day trade level, you could use a lot of the techniques that I just mentioned to you to manage your take profit moments. Like that could be a good way. Like because this is and that yellow line or the 20 period moving average, you can make sure that that's helping you get in on an uptrend or those kinds of things. So a lot of these things, if you were to day trade this strategy like a lot, it becomes like part of your vocabulary. All the rules start to become vocabulary to you, and you go to a daily chart, or you go to a penny stock, or you go to gold, or you go to anything, and you're like, wow, and you see things really great because the whole concept of the alligator mouth, if you apply it on the 20 and 200, you can really see it. See how it just starts opening up and opening up and opening up? Well, that's a problem when it gets really big. At that point, prices are going to possibly start reverting back and the mouth is going to start to close, so we don't know how long this could go here on TMO, but it does look like a pretty good stock. But you're certainly a lot better if you can get in this kind of crowded region, in this crowded area where things change and now every trend is going up. The price action is going up. This moving average is going up. This is going up. This one turned around. It's slightly starting to go up. And then you got that red candle and then this big price jump. That's just about every time going to lead to a really the mouth opening, and it's just going to do that. That's just what it does. When things get really tight, you know, the next thing, if it qualifies on a momentum breakout like that did with the gap open, it is going to be the mouth opening, and you can't deny that. You can't deny that. That's one of the coolest things about like this system is it's just price action. So there's just no other way for it to go. So it works. But when it doesn't work, you get stopped out at a little loss instead of a big loss. And so in the end, like I was explaining actually Monday, when you lose money in the system, you're not actually losing money because you're getting in to potentially profitable trades using this system. So therefore, when you get stopped out at a loss, it's actually part of the system that makes money in the end, that is profitable. So you can't think of getting stopped out for a loss as a loss. It's actually part of the profitable system. So you're not losing money when you get stopped out at a tiny loss because it's part of that profitable strategy. However, if you were to have held on longer than you were supposed to and did not exit at the bottom of the candle or at any of the proper stop losses, then you're no longer in the profitable system. You're now losing money. So at that point, you would be losing money, actual money. You could call that losing money. But getting stopped out at a loss is not really losing money. It's part of making money. Hopefully that makes